Hello, everyone, and welcome. This is Allie Katz, personal family lawyer and founder of Eyes Wide Open Life. And I'm here today with an important tax planning update for end of year 2021. For those of you who would love to zero out your income taxes and pay no income taxes by using the charitable deduction opportunities that are available this year. So I want to go over those opportunities for you now so that you can talk to your tax advisor and begin to identify which charities you want to support instead of paying federal income taxes using provisions that are only available this year. So that means that you need to make these decisions before the end of December 2021. By December 31st, 2021, these opportunities will be gone, meaning that if you want to use any of these opportunities, you need to talk to your tax advisor now so you can get the projections from your tax advisor done and really be clear on how these opportunities apply to you. So the first thing to note is that these opportunities apply to you if you itemize your deductions. That means that you have expenses over $12,550 if you're a single person, or $25,000 if you're married, because if you have deductions less than that, then you'll qualify for the standard deduction and you won't be itemizing your deductions. So this is only if you'll be itemizing your deductions and you have deductions in excess of those amounts. In that case, you have the opportunity to make charitable contributions this year and receive up to a 100% deduction for those charitable contributions against your adjusted gross income, meaning that you can zero out your income taxes by making donations to public charities. Now, public charities are religious organizations. They are your favorite operating charities. They are not private foundations, donor advised funds, or supporting organizations. So these are public charities that are either operating or religious organizations that you support. Charitable donations are itemizable deductions. In the past and in the future, you were only able to deduct your charitable donations that you itemized up to 60% of your adjusted gross income, meaning that you couldn't zero out your taxes. But this year, because of the tax provisions that are in place, you can deduct up to 100% of your adjusted gross income if you donate cash. And it appears that cash means not crypto, but actual USD cash. And as I said, it must go to a public charity, not a donor advised fund. So that is one way that you can zero out your income taxes for 2021. And that applies to anybody that has itemized deductions above that $12,500 for a single or $25,000 if married. Now, there's other opportunities for you if you have significant assets in retirement accounts. If you have significant assets in retirement accounts and those assets are subject to required minimum distributions. So once you are 72 years old, the IRS rules require you to take required minimum distributions every year from your tax deferred retirement accounts. It's because the government wants to tax that money that you put away tax deferred over time. So if you have a large IRA and you know that you will not need the income from that IRA, but the government is going to force you to take that income and pay taxes on it, which could be up to 50% taxes, depending on what state you're in. Instead, what you might want to look at doing is making a qualified charitable distribution. You can make a qualified charitable distribution of up to $100,000 a year per person, in which case that money goes right from your IRA to your chosen charity. It does not get added to your AGI, to your adjusted gross income, which is important. And it goes to your favorite charity as tax efficiently as possible. This is the most tax efficient way to give money to charity. It saves you from paying the government, and it goes straight to charity. And you can look into this option if you are over 70 and a half, even if you haven't started taking your required minimum distributions yet. So if you're over 70 and a half, you have a big IRA. This is specific to IRA accounts. Okay, if you have a big IRA and you know you're not going to need those required minimum distributions, then instead of sending that tax money to the government, half of it going to the government, send it to your favorite charity instead as a qualified charitable distribution. Now, if you are over 59 and a half, and you have other qualified funds outside of an IRA, that could be a 401k, it could be a pension plan, then what you might want to do is make a withdrawal from your retirement account. And the reason you have to be over 59 and a half for this to work is because in that case, you don't pay the 10% penalty for withdrawing. So you'll take the withdrawal from your retirement account, and that will add to your AGI, but then you can donate the full amount of that withdrawal to your favorite charity and take that 100% deduction, up to 100% of that adjusted gross income. In fact, you could even donate more than that to charity and carry forward that donation into future years, that deduction into future years. Just in the future years, it will only deduct against 60% of your adjusted gross income. So let's say that you had adjusted gross income of $100,000 this year, but you made $150,000 donation to charity from a withdrawal of your retirement account of some kind, a pension fund or other qualified plan. You would only be able to take that deduction for $100,000 this year, and then $50,000 of that would go to next year, which would then only be able to be used up to 60% of your AGI. Ordinarily, donors are advised against withdrawing funds from their retirement account and then giving them to charity, because you have to declare that withdrawal as income, and then limits on taking that offsetting deduction and other tax effects could result in your gift actually increasing your income tax. But this year, with a 100% deduction against your adjusted gross income allowed, this would make sense for you to do. Now, with any of these strategies, you want to talk with your tax advisor right now, because they have to be carried out before the end of the year. And it takes time for your advisor to run the projections and for you to make the withdrawals and the distributions before December 31st. And I want to be clear that this all goes away on December 31st. So if you meet any of these criteria, if you want to zero out your income tax this year by making charitable contributions, now is the time to take action. You are welcome to join us in our Eyes Wide Open Revolution Facebook group, where we'll be providing more guidance. But in any event, talk to your tax advisor, talk to your personal family lawyer if you have one. And most importantly, talk to your favorite charity for support, and let's fund the charities that we love to support rather than funding the war machine with our tax payments. This is Allie Katz, personal family lawyer, supporting you to live an eyes wide open life. And I'll look forward to supporting you in 2022 to step into your journey to financial liberation. This is just the beginning, and I'll look forward to seeing you again soon. Bye-bye for now.